Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 27th, 2026, and we're diving into the latest earnings report from Manhattan Associates, a leader in supply chain and omni-channel commerce solutions. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Manhattan Associates has just released their fourth quarter and full year 2025 results, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Manhattan Associates reported a net revenue of $270.4 million for Q4 2025, up from $255.8 million in Q4 2024. John, can you elaborate on the key drivers behind this growth?
Absolutely. The revenue increase was primarily driven by a significant 20.3% growth in cloud subscription revenue, which reached $108.6 million. However, it's worth noting that license revenue saw a decline, dropping to $2.6 million from $5.5 million in the previous year. This shift highlights the company's strategic focus on cloud solutions.
And what about profitability?
Manhattan Associates reported an adjusted EPS of $1.21 for Q4 2025, beating the analyst forecast of $0.73. This reflects strong operational efficiencies and cost management, despite the challenges in license revenue.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How did Manhattan Associates perform in this area?
The company reported a GAAP operating income of $67 million for Q4 2025, up from $60.7 million in Q4 2024. Additionally, cash flow from operations was robust at $147 million, indicating strong cash generation capabilities. They also repurchased $75 million worth of shares, reflecting confidence in their financial health.
Looking ahead, what guidance has the company provided for 2026?
Manhattan Associates has set a revenue guidance range of $1.133 billion to $1.153 billion for 2026, with an adjusted EPS expected to be between $5.04 and $5.20. This guidance suggests a steady growth trajectory, supported by their expanding cloud offerings and market presence.
CEO insights and strategic initiatives. Eric Clark, the CEO of Manhattan Associates, made some interesting comments in the earnings release. Can you share those insights with us?
Certainly. Eric Clark highlighted the company's record fourth quarter cloud bookings and noted that their industry-leading solutions are gaining market share. He emphasized the expanded go-to-market footprint and the launch of new AI agents, which are expected to drive growth and deliver optimal results for their customer community.
How do these strategic initiatives position Manhattan Associates for future success?
These initiatives are crucial as they align with the growing demand for cloud-based solutions and AI-driven efficiencies. By focusing on innovation and customer success, Manhattan Associates is well-positioned to capitalize on market opportunities and sustain its competitive edge.